All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. All right, we've got to get started with our analysis. So let's go into the euro. So the euro is, I think it's pretty easy to read actually, because we're range bound. So the good news is we know exactly where where the breakout points are. That's probably the most important thing about the euro is we can, well, first of all, let's go out to the daily chart really quick and just realize that the this triangle we're still dealing with is still capping the upside. And if you go to the 4-hour, you can see that trend line it's a descending trend line. Okay, so you can see this one right here. Okay, it's a descending trend line that comes in now 113 113.20, but what we'll have to do is probably take yesterday's spike high. Okay, and this is really critical resistance today. All right, so that resistance is very key. So I'm going to put right in 113.25 and support here. Well, support's below there, or it's probably above there, but we'll take this lower trend line here. Okay, you can see how we're just hugging that trend line right there. I don't expect that to break pre-FOMC. It could. Okay, 112. Well, obviously 112 is support, the same support that we had from yesterday. 113, 113 and a quarter, and 112. Okay, so those are really our breakout points today. So 112, major support. Whoops. Major support, resistance 113.25. Okay, and we are in a range, but we're going to probably break out of the range today, would be my assumption. Post FOMC. Now, I want to say that we're going to break out of the range today. Then again, maybe I mean I have great expectations for today. I really do, because I feel like we're going to get some guidance. But there's obviously that chance that we get a situation where the market goes, well, that was a whole lot of nothing. The market, maybe expectations stay in line, that we're probably going to get a rate rise in September, but we can't really tell if it's going to be September or December, and we don't know if it's going to be one or two rate hikes, but it seems like we are going to get a rate hike, and really the market expectations don't change any from where they're at right now. Then we get, unfortunately, like a fizzle, and the market doesn't move. That's possible as well, obviously. So just be careful as we're approaching 112 or 113 and a quarter today. What I'd like to see is a sustained break above these red lines, a sustained break above or below. And if we get a sustained breakout above or below, then you'll know that the move is it's a solid one, right? So you have to just be careful if we rally like into 113 and a quarter, and we can't hold it and we come back down again, and you got long because you thought it was going to break out. Make sure you pull the plug on the trade too. Make sure you cut your losses, or manage your downside risk. Same thing if it's short. If it drops to 112, but it doesn't look like it's going to break down, and then it starts to reverse on you. Don't hesitate too much to close out of a losing trade, especially if you're trading near these breakout points, because you could very easily get like a false break and back into the range too. Again, I'm going to be looking at the reasons why, like why did the euro rally above 113 and a quarter? Oh, it rallied above 113 and a quarter because from what the comments from Janet Yellen's press conference, it doesn't seem like we're going to get a rate hike until December at minimum. Okay, well then I'm going to cover my short euro dollar trade and I'm going to get long. that seems like the right trade, because that is what, the indication that myself and the rest of the market's getting. Or, why did the euro trade below 112? Well, the Fed hiked rates today. Oh, okay. Well, that is a good reason to, be on the short side of the euro dollar. Okay. Um, Again, know the reasons why we're down here or up here. Um, Two, don't just blindly just look at the charts and say I'm buying it or selling it, because it could very easily be a whip, a whipsaw false break one direction or the other. So anyway, we have our parameters. I'm assuming we're going to be mid-range, like right where we're at, ahead of the FOMC. Usually that's what happens between a big new, before a big news event. We get mid-range, and that's where we're at right now. We're just mid-range, and you can see we're just kind of stalled right in between them. It tends to happen. All right, let's go to the cable. All right, so here's the pound dollar. The pound obviously squeezed me out, probably squeezed out a few other traders too. Next key resistance is going to be those highs right here. That comes in on 158, what, at 158 and a quarter? 158.15. That is your next resistance level for the cable. No ifs and or buts about it, and it's big. Because let's also think about this really quick. I'm going to have to revisit what we had drawn the last week or two. So let's put this in. Okay, this is a complex head and shoulder pattern. It's that means that the neckline is slanted, which seems to be the case right here. Okay, and so that means that the breakout point is probably around 159, or roughly, maybe even 158 and change. So you got to be careful this neckline too on any rally. Now, what you might also want to do is take this high to low and figure out if there's any fibs in between, which I believe there's a 50% fib that comes into play here soon. Okay, so we have 50% fib that comes into play right, and let's get rid of this for a second so you can see it. And let me get rid of these lines, because obviously this is ascending wedge. Whenever I look at an ascending wedge, it's got about 70% chance of moving lower, 30% chance of moving higher. Well, we moved higher, so it was one of those that ripped out of the ascending wedge. Now, this inverted head and shoulder pattern, like I said, it's complex, something like that. Okay, the 50% retracement comes in around 159. Neckline's going to be very close, so if it does spike up, be real careful that it's holding, because what could happen here, obviously, is you get a situation where you see a rally, you hit the neckline. Everybody thinks it's breaking out too. You hit the neckline, and then it reverses from here. So just mind the 50% retracement at 159 if we break through 158.15. Okay, we won't worry about that right at this very moment in time, but it's something that we may look at, tomorrow, especially if the dollar weakens. Now, support for the cable. You have to imagine support. Well, it's going to be right at this breakout point, because obviously, if we turn lower and we break back below, what is that, 156.50? Okay, we drop back below 156.50. That would be very bearish on the daily chart, because that would set up a real big, like, shooting star, inverted hammer, however you want to look at it on the daily chart. So bulls are going to want to hold 156.50 now. That's going to be good support. Okay. And, I want to say that we're bullish, but, we're still in a pretty big range. It's trying to turn bullish, but I still say it's in a range. We got to get past today, really. Let's get past today before we make any definitive. Before we make any bold assessments of the market, let's get past today because today is such a big day. Um, all right, let's go over to the Swissy. Yeah, you make too many bold assessments ahead of a very important FOMC day like today. Your likelihood of looking like a fool by the end of the day is quite high, if you get my drift. All right, you know what I mean? So we're going to try to stay away from that the day of the FOMC. Okay, so support. Wow, look at that spike support on the Swissy. Thought 92.50 would hold, but really it's the wick lows, and you can see how important the 92.30 level is. Very important. That's we don't even need really need to look too hard there. 92.30. All right, where is resistance? Well, we know resistance is at 94 cents, but, and by the way, I drew that to illustrate if we ever get above that trend line, I'm going to get long. That would have to mean that Greece is saved, but right now, that's not in play, so I'm not even worried about that at this moment. I mean, I don't want to trade the Swissy anyway, but I'm just, for those of you that really want to, I'm just trying to do you a service here. But you know my thoughts on the Swissy is stay the hell away. Okay. Stay the hell away while Greece is in play. How about that? I just made a new saying. Stay the hell away while Greece is in play. What do you think about them apples? Not bad, huh? All right. Um, okay, I'm just going to write 93.30 for now, but it's minor resistance. All right, let's go over to the yen. Now the yen, surprisingly strong overnight. Um, yeah, and I mean this could be one of those situations where it just stopped out a bunch of people that were short the dollar yen, right? Overnight, maybe stop them out. Um, so we hit 124. Then we've got, obviously 123.10 still. What a mess. What a mess this chart is. It's hard, when you look at a chart and you can't really make a decision on, should I be long or should I be short? I mean, I mean, hold on really quick. All right. You know what? Instead of writing 124, that spike high right there, which is actually a valid spike, that comes in at 124.15, which is also the 50% retracement of this entire move down. So we're gonna write down 124.15, and then supports down here 123.10, and we're just gonna leave it at that. 123.10, 124.15, and we're still in a range. Um, all All right, let's go over to the Canadian. Oops, sorry, I went the wrong way. There we go. Oh, 1 second, guys. Okay, so here's the dollar Canadian. The dollar Canadian was supported at 122.75. I wrote down that level on our hit list last night, or excuse me, on the Forex wrap for our traders as well. Um, but it was very minor support. And this dollar Canadian, obviously, if we have some dollar weakness, this 121.50 is not um, um, unachievable. I really would love to buy the dollar Canadian here. Okay. Uh, I do know that this is really critical resistance for sure. And that comes at 123.65. I just don't know where good support is for now. I mean, because that's obviously great support, but I don't know if that's really going to be in play today. I guess it could, but so it looks like the 50% held. That's comes in at 122.75. I think we'll write that down for today, but we have the potential to move much greater than what you see here. 22.75 is support, and resistance, which is good resistance, is 123.65. That's going to be actually pretty stinking good resistance should we get there. Okay, we're in a range environment in the dollar Canadian. Let's go to the Kiwi. Now the Kiwi has been beat up. We were actually at new trend lows overnight, and the Kiwi dollar continues to just get wrecked. There's not a whole lot stopping the Kiwi. We have 69 is just rounded support, but what we have to look at is this 50% retracement of the weekly chart, monthly chart. Okay, that comes in at 68.55. So if we imagine some dollar strength comes in, 68.50 is going to be really good support, because you have to imagine if the dollar really rallies and the euro gets down towards 112, the Kiwi and the Aussie as well, they're already very weak as it is. That weakness can just really start to feed on itself. Okay, oops. So 0.6855 will be in, well, and then I'm going to write down 0.69 since it's just a round number. But I mean, if you think about it, if you were holding, the you're holding the Kiwi long, and you're like, man, I'm hoping today the dollar weakens a little bit post FOMC. I mean, where are you going to try to get out? If you were like, thank God it just got back to 70 and a quarter. 70 and a quarter, in my opinion, is going to be pretty significant resistance, and it has been, okay, because that's previous support there. We're not even getting anywhere close to it right now, but I would assume any rally back up to 70 and a quarter is going to see selling now, because you're going to get people that are like, thank God I got back up there. I was able to get out. This is probably the only currency right now that's got a bias in it, because it is continuously just getting beat down. Well, let's take a look at the Aussie, because the Aussie has been under pressure today. So the Aussie came out of this triangle. Man, Aussie's not looking healthy, is it? And yes, I'm still long the Aussie New Zealand. I mean, I've been sitting in that trade, and it's a full-size position. and the Aussie's not looking good. But the good news is for the Aussie, New Zealand, the Kiwi's not looking any better. So that's, I guess that's positive if you're long the Aussie, New Zealand. But the Aussie dollar does look pretty damaged. Let's see here. Okay, so the 618 is holding right now. That's important support. That's important support, and we're sitting on it right now. Next level support comes in at 76.40. And so if we get a resistance, or resistance, if we get a rally in the Aussie or we get dollar weakness that comes in today, think about where, sellers are going to emerge. They're going to probably come right back up to here and say, thank God, get me out of this thing. Think about the sellers. Think about the people that are long. If we get a rally back up to 77.50, they're going to be, thank God I got back up there, right? It's not great resistance, but like I said, put yourself in the shoes of people who are long. Where am I going to want to exit? God, we got just crushed overnight, man. If we just rally back to 77.50, I'm getting out. Okay. We're still in a range though. We're in a big range in the Aussie. All right, let's take a little bit of a break here. When we come back, we're going to do the dollar index. I'm going to try to do the peso, the Nordic currencies, because obviously I want to try to get as many of these majors down. If you guys want to look at um, any other currencies specific that I don't look at, that are dollar based, make sure you let me know. And I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Sorry for the wait there. Let's go ahead and take a look at the dollar index. Let's get this one done, one and done. So here is the dollar. And you can see the dollar is obviously very poised to move. Move dollar. Okay, so let's do this. Let's zoom back out a little bit. And I'm assuming we can actually take this down. Okay, matter of fact, actually, let's do something like this. You can see that we have a couple of trend lines that we might take out here. Well, we could even take out this downtrend line here. This is an hourly chart, okay? Because that's capping us at the moment. But I don't want to deal with that one yet. Because if the dollar gets a little bit of a boost, you know, you can see actually we're really narrowing. Let me delete this one here. So I'm just trying to narrow the breakout points. Okay. $94.50, $95.20. That's it. $94.50, $95.20. Okay, and let's take a look at the peso. Let's see if there's anything happening with the peso. Hmm. So, I mean, the peso just it's ready to move. Obviously, it's waiting for cues from everybody else, but it's ready to move too. Well, 1546, 1534. I mean, this could be setting up for a move. 1536, 15, did I say 42? Oh, I'm sorry, 1547, 1530, 1530, actually 1533. Okay, yeah, we're also in a range. Let's take a look at the Nordic currencies, see if there's anything happening here, because I think they're both really quiet today. Oh, the Norwegian krona. Thought we'd get a move ahead of the Fed, but nothing's going to happen here until post-Fed. So, but really, this is all really very critical support here for the Norwegian krona. 770. It's pretty important support. 780 seems like really good resistance at the moment. Let's see if we can get the Swedish krona. Well, talk about this one's ready to move pretty aggressively too. And remember, this has had a really key rejection, you know. So if it moves down, it should be a really good move down. Um, we have this trend line retest broken. We're sitting on support. So if we get a move below 814, that should be a pretty damn strong move. That's 823, 814, and 823. This one's ready to move too. Yeah, the great news is the market is ready. I mean, everywhere, everywhere. We've got breakouts that this is a pretty strong support. Eight. What did I say? 23. Let me just double check that. 23. Yeah, 23, 2350. So I mean, we've got some really tight ranges across the board, and we're staging for a pretty damn good breakout everywhere. Now let's just hope we get something to really sink our teeth into today. That's going to be, obviously key. Let's hope we get some, like really aggressive dollar selling or really aggressive dollar buying. Either or is going to produce some pretty good moves in the market. And although I'd like to see some dollar strength just because I'm short the euro right now, it doesn't really matter. I mean, if we get dollar weakness, I'll play that too because there's plenty of dollar weakness to play. You know, buying the cable, buying the euro, shorting the Canadian, um, you know, maybe shorting the yen. Depends on how the equities are reacting to do that. But you know, if you're going to buy the, you know, if you're going to buy the dollar, there's plenty of trades to take out there too. You know. Okay. Um, let's see here. Wow, where are we? Going back over to your questions.